Thanks all for coming. Thursday, 14th of May, the Daily Market Wrap. Jack, some really big announcements coming out of the US last night.
Yeah, so Kevin Warsh has been officially voted in as the next Fed chair. Trump's been desperately trying to get the incumbent Jerome Powell out of the seat. Hasn't been successful. They've been butting heads over interest rates. Trump really trying to get them down, but Powell hasn't been budging. So, Warsh has been handpicked by Trump to come in, and Trump's got to, again, apply that pressure on him to drop rates.
And the PPI data, the biggest in quite a number of years.
Yeah, so this is what's going to make Warsh's job really difficult is inflation sort of running red hot in the US. So it's coming very, very high, the highest in 4 years. That's got to boost up the US dollar because the Fed's basically got its hands tied now. They won't be able to cut rates. The market's predicting them to hold rates until next year. And from then, it's more than likely that they're going to raise rather than ease.
And Nvidia, so just been valued at $5.5 trillion, which is a record. Is there any doubt over the pricing of that, or do people have a fair bit of confidence in it?
People have been talking about an AI bubble for a couple of years now, and Nvidia is the first company to ever hit that $5.5 trillion valuation. So there's always going to be doubt whether it's sort of markets being optimistic about potential rather than actual output at this stage in time. So until markets think the output might not be there and refuse to stop pumping money into it, they're just going to keep growing and growing. And the CEO of Nvidia is with Trump heading to Beijing this week, trying to get an import license into China, and if that happens, the price just could skyrocket from there.
Yeah, it'll be interesting to see if AI itself can come up with a solution to make its own servers more efficient.
Yeah.
And today, some UK GDP data being released.
Yeah, it's quarterly data is expected to rise slightly, but I guess the backdrop in the UK is there's a lot of political tension at the moment. The Prime Minister's under significant pressure, and sort of there's been a lot of calls for him to resign, which he's sort of holding off. So it's sort of making the bond markets really volatile, and it's going to be interesting to see how consumers sort of react to the news. And GDP is a sort of indicator of economic growth. So if that's starting to slow down, it could have a big impact on whether the Prime Minister's able to hold on or not.
And some slowing US retail sales released last night. What does this percentage actually mean? So from 1.7% to 0.7%.
Yeah.
Of what?
Yeah, it's sort of just the rise in retail sales month on month. So a percentage drop. So gone from 1.7 to 0.7 is showing that it's sort of increasing at a slower rate than it was previously. So it indicates there's a bit of trouble with the consumer, facing a bit of the cost of living pressures. Obviously, inflation's rising a lot in the US, which is bumping up the prices of everything. You got the US-Iran conflict, which is pushing up prices again. So yeah, there's a lot of pressure facing US households.
And some big moves overnight. So starting with the Aussie Kiwi, so a sort of 1% boost there.
Yeah, so comparatively, Australia's economy is doing quite well, especially compared to New Zealand. Obviously, you've got the US-China talks this week, and China sort of moving in a positive direction. Australia's economy is really tied to Chinese performance, so that's boosting up the Aussie dollar as well.
And the Nasdaq continues to shoot up. Came back down a little bit over the past couple of days, but still strengthening.
Yeah, dropped back down a little bit, but you can see it reached another high. So yeah, it's just going from strength to strength at the moment.
And similar with silver, I think there was a few people expecting to see a bit of a pullback after the massive jump a couple of days ago, but continuing to go strong there. think business as usual.
Yeah, it's got, silver's also got a bit of industrial demand in sort of AI and semiconductor, so that side of things is also helping push that up.
And the HK50, the Hang Seng, what's driving this large increase here?
Yeah, had a big spike yesterday, again, really closely tied to China, so any positive news to China will sort of have a flow-on effect. They're also optimistic about sort of easing tariffs. They don't sort of, the big concern is tariffs being imposed on Hong Kong, so that concern is easing somewhat, so yeah, that's moving in a positive direction now.
And oil again, bit of up and down, which I guess, 6 months ago these would be big movements, but sort of reasonably typical of what we're seeing at the moment.
Yeah, it's pretty mooted. The last couple of days you can see it's bouncing up and down a little bit, but I guess everyone's attention is shifted towards that Chinese summit away from the conflict for this week at least. So yeah, unless Iran comes out and does something or Trump says a crazy comment in Beijing, I think markets will sort of not be too focused on it this week.
Yeah, it's always surprising to see sort of how quickly people just can focus on something different or whatever's in the news, social media at the time, and you can see that reflected in the real markets itself. And the chart of the day, Commonwealth Bank.
Yeah, so the CBA is kind of Australia's highest quality and most robust stock, probably one of the most robust in the world, just given the comparatively high bank valuations that Australia has compared to globally. It had its worst single day performance since it was listed. It lost over 10% yesterday. There were sort of two main factors for that. It increased its bad debt provisions in its earnings report, which the market didn't like. So it just basically means it's expecting more people to default on mortgage payments. And then the second factor was the budget, the federal budget that got released this week. People are expecting that to slow the growth in house prices, might even reverse it moving forward, which again is bad for CBA because their mortgages won't be as valuable. They can't write as big a loans. So yeah, that combination of factors has taken a lot of the sting out of the CBA price.
So defaulting mortgages is starting to sound fairly familiar from a few years ago. Is this stage one?
I wouldn't say stage one yet. I think just the cost of living at the moment, rising inflation, high interest rates just puts a lot of pressure on it. Whether that sparks a financial crisis is sort of we've got a bit of a ways to go until we get to that point. But yeah, I mean, it's not looking positive, but yeah, I think it's far from doomsday.
Very good. And the article of the day around Kevin Warsh.
Yeah, just a bit of background on who he is, why Trump wants him in, and what he might possibly do over the next coming years with his policy.
Okay, thank you, Jack. Any questions out there from the audience?
Did we see movement in the other bank shares similarly following the budget announcement where we're expecting now house prices to drop and therefore people not having the same level of equity?
Yeah, most of the big four sort of raise those bad debt provisions. And yeah, just generally if house prices are sort of looking to struggle, the banks are going to struggle. Obviously a big component of their business. So yeah, all the big four sort of came off a bit. Not as bad as that, but they all did, yeah.
Didn't the government also increase capital gains tax as well? Did that have an effect on any of these stocks or even the Australian dollar?
Yeah, they've changed the discount on the capital gains. They've also removed negative gearing, which will impact property investors, which is sort of one of the reasons why they expect price growth to drop. It also means rental prices are likely going to increase a bit over the next couple of years.
Yeah, I think it'll be a bit more of a sort of slow burn if we, seeing the changes for that.
Yeah.
Cool. Thank you, guys.